Thanks everybody for joining. I'm just going to give it a minute to let everybody in from the waiting room. Just have some patience with us. Thank you. All right, looks like the entries are slowing down, so we're going to go ahead and get started. Good afternoon, and thanks for joining us today. For those of you who don't know me, my name is Megan Hahn, and I'm the Deputy Director for the Public Services Division here at the IBT. We are very excited to be partnered with the Student Borrower Protection Center to help our public sector members learn more about the Public Service Loan Forgiveness Program. You have all been on the front lines and been dealing with a lot over the last 2 years, and we are hoping we can help those of you with federal student loans learn how to get those forgiven. The deadline for applying for this program is October 31st, so while there is still some time to apply while the waiver process is in effect, that deadline is fast approaching, so we're doing our best to get this information out to as many of you as possible. If you have coworkers that may be interested in learning about this program as well, please have them reach out to your local union, as we will be having another session in September and in October. Our goal is to get as many Teamster public student loans forgiven as possible for our public service workers. There will be a question and answer session at the end of this presentation. So if you have any questions, please drop them in the Q&A down at the bottom of your screen. With that, I'm going to turn this over to the expert here who knows more about how to apply than I ever will. Amy, the floor is yours.
Thanks, Megan. And thank you so much for having me here today. My name is Amy Solata. I'm the Outreach and Advocacy Manager at the Student Borrower Protection Center, and we are a national nonprofit policy organization focused solely on alleviating the burden of student debt in the country. And we do this through a mixture of advocacy, policymaking, and litigation strategy to rein in industry abuses, protect borrowers' rights, and then advance economic opportunity for the next generation of students. I'm super excited to be here with you today. I'm just going to share my screen very quickly. And as Megan mentioned, if you have any questions throughout the presentation, please just throw them in the Q&A, and my colleague will be collecting them so that we can go over them at the end of the presentation. Okay, so let's get started. So to start, we're going to talk about the program as it was created and how it functioned until very recently. So Congress created the Public Service Loan Forgiveness Program in 2007 as a way to help public service workers who are struggling with their student loan debt, and also to make sure that future students and graduates wouldn't be deterred from entering the public service because of their student loan balances. And to put it simply, PSLF is the promise that if a borrower works in public service for 10 years and makes payments on their student loans for that time, the remainder of their debts will be forgiven. But as we'll see, and as I'm sure you already know, if you're on this call, it's a bit more complicated than that. So first I'm going to explain how it worked, then what some of the issues were, and then how you can benefit from the current waiver period to access your own PSLF student loan forgiveness. So how does PSLF actually work? More than simply working in public service for 10 years, there are normally 4 specific criteria. First, you need to have a direct loan. That's one of several federal loan types. Second, you need to be in the correct repayment plan, which for the program is generally an income-driven repayment plan. Third, you need to work in public service. And then finally, you need to make 120 qualifying payments or 10 years worth of payments on those loans. And I'll drill down on some of these for a moment. Only direct loans qualify for public service loan forgiveness. Direct loans have been the main federal loan type since 2010. So if you took out a loan since then, it likely qualifies. But if you have an older loan, sometimes it could be a federal family education loan, or sometimes abbreviated to FFEL loans, or a Perkins loan, those do not qualify. What you can do though, is you can consolidate those loans into direct loans, which is like refinancing with the federal government, and it pays off your old loan and it replaces it with a new loan. Under the normal program, when you did this, you lost any credit that you had gained towards forgiveness. since you're essentially, when you're consolidating, you're taking out a new loan. But as we'll discuss in a moment, this isn't the case during the special waiver period. So it's important to know that under the normal program requirements, most people are blocked out completely based on their loan type, and it has nothing to do with whether or not they did 10 years of public service work. Second, your direct loans need to be in an income-driven repayment plan, or an IDR plan. It's abbreviated to IDR. It doesn't matter how much you're paying in these plans, it's just that it's the right plan. And these plans go by names like income-based repayment, or IBR, income contingent repayment, or ICR, pay, spelled PAYE, or pay as you earn, or repay, spelled REPAYE, or revised pay as you earn. Some other payment plans in certain instances might also qualify, but in general, you want to be on an IDR plan. Third, to get public service loan forgiveness, you need to work in public service, and the focus is on your employer, not on your role at the organization. So that covers most city, state, federal, tribal governments, 501c3 nonprofit organizations, and then certain other nonprofits as well. You also have to work full-time, which is defined as 30 hours a week, or whatever your employer deems as full-time if it's greater than 30 hours. And the 30 hours could be with more than one employer if you have multiple part-time jobs that would add up to 30 hours a week. Finally, you need to make 120 of these qualifying payments, which are payments on the right loan, in the right repayment plan, and during the correct employment. And the payments have to be made in full and on time. But if you leave public service and then you come back, you can continue accruing credits. The time in employment and the payments that you make don't need to be consecutive. There have been some changes to the Pslf program because of COVID. So first, for those loans that are getting the payment pause, those that are owned by the federal government, each month of suspended payments counts towards Pslf loan forgiveness, towards the 120 total payments you need. However, you still need to meet each of the other criteria, and the most relevant of these is the public service employer. So now we'll talk a little bit about what has changed in the program and why. The initial rejection rate was 99%. Only some 800 applications out of 90,000 were approved, and folks are being denied because they had the wrong loan type, or they weren't in the right repayment plan, or some other technical reason that had nothing to do with whether or not they did 10 years of public service work. And as you can imagine, this was a huge problem and an incredible failure for the public service workers that Pslf was meant to support. Many folks took out debt to become teachers or government lawyers, specifically because they had been told that after 10 years of affordable payments, the remainder would be forgiven. But some good news on this front is that last summer, the Department of Education, for the first time ever, issued something called a request for information. And basically they asked borrowers to tell them about their Pslf experiences. This was an opportunity for borrowers who had worked in public service for 10 years, but who were going to get locked out of the program because of the bureaucratic criteria, or for someone who had delayed retirement to get those extra qualifying payments, to ask the Biden administration to fix the program once and for all. And nearly 50,000 people submitted comments sharing their experiences with Pslf, and they all had a common theme, that this program really wasn't working for those it was meant for. So, within weeks of the request for information period ending, the federal government announced a special waiver period that would address many of the issues raised by borrowers during that request for information period. So for a limited time, the Department of Education will retroactively grant credit towards forgiveness excuse me, to borrowers for months that previously didn't count for the program, either because they had the wrong loan or they weren't in the right repayment plan. So we'll walk through some of these changes now. They're all of these changes now. Essentially, what the department's waiver does is give public service workers credit towards loan forgiveness, regardless of what type of federal loan they have, for any period of time since October 1st, 2007, when the program began, and as long as they were in qualifying public service employment, and as long as the loan wasn't in default, deferment, or forbearance. So even for months in which borrowers didn't actively make a payment, as long as the loan was in repayment status, they can get credit. These credits will be retroactive, so borrowers can receive credit for past months that were previously ineligible. In short, for any months since October 1st, 2007, that a borrower had any type of federal loan, worked for a qualifying public service employer, and wasn't in default, deferment, or forbearance, that borrower can receive credit towards the 120 credits they need for forgiveness under PSLF. Now, as with PSLF, the income-driven repayment plans, or those IDR plans I mentioned, haven't lived up to their promises of delivering debt relief. In April of this year, the Department of Education announced that it would review the IDR process and count some periods of forbearance and deferment. So this means that for periods in which borrowers had up to 12 consecutive months or over 36 cumulative months of forbearance, they can receive credit for those months. In addition, the department will be counting periods of deferment prior to 2013. So in some cases, periods of forbearance and deferment will count towards the 120 credits needed for forgiveness. And we're still awaiting further details from the Department of Education on this, but when we receive them, we can absolutely provide those. But the good thing about this is that this will only mean more qualifying payments for some borrowers. No one will lose any credit towards forgiveness because of this account adjustment. Okay, it's important to note that the waiver is not completely automatic. Normally, PSLF requires that borrowers have a specific loan type, as I mentioned, a direct loan. Although the waiver allows borrowers with any loan type to get credit for forgiveness, those without direct loans will need to take some steps to convert their loans into direct loans through that process called consolidation, though you still will get credit for time before the conversion. And almost all borrowers, regardless of loan types, will have to certify with the Department of Education any period of qualifying work since October 1st, 2007. And the idea here is that if the government doesn't know when you had qualifying work, it can't award you the right credits. And importantly, the department's waiver only lasts until October 31st, 2022. So this means that any borrower who must change their loan type through consolidation or certify their public service work with the Department of Education has to do so before this deadline of October 31st of this year. This does not mean that everyone will receive their new credit by this deadline, just that the paperwork on the borrower's end needs to be completed. And credits will be given on a rolling basis. The department may take more time beyond this deadline to process everyone, but if you get credits from the waiver, those are permanent. So if you don't receive enough to meet the 120 credit requirement, you can continue to accrue more credits after this deadline, adding to those that you received during the waiver. Okay, so with this in mind, there are 3 things that all public service workers with federal student loans should do. To figure out how this waiver applies to you, every borrower should take 3 steps. First, confirm your past and present employers qualify for public service or qualify as public service employers. Second, determine your loan types and consolidate if necessary. And then third, certify your employment with the Department of Education. So first, confirm you have a qualifying employer. Nothing about this requirement changed during the waiver. You still need to work in public service, except that during the waiver period, you don't still need to be employed at the time that you apply for forgiveness if you've made over 120 payments. Remember that qualifying employers include any government employers, that's federal, state, local, and tribal, any nonprofits that have a 501c3 tax exempt status. Certain other nonprofits also qualify depending on the work they do. However, working for a union or a political organization does not count. So any organization whose tax status is a 501c4 will not be eligible for PSLF, nor do any for-profit employers qualify. And if you aren't sure whether your employer qualifies as a public service employer, the Department of Education does keep a database that you can search. It's important to note, though, that this database isn't necessarily exhaustive. So if your employer doesn't appear, but you still believe that you are a qualifying public service employer, you can proceed with the process. And you can access this list by using the PSLF help tool, which is available at studentaid.gov. And the database is the first step in the help tool, so you can quickly access it to check your past and present employer status. And we know that everyone on this call already qualifies because you're working in the public services division with the Teamsters, but you might have past employment that might also qualify. So that's why we like to really drill down on what qualifies, because you might be sitting here thinking like, well, I have a couple of years while I've been doing this work in my current position, but you may have other work that qualifies in the past. So we want to make sure everyone gets the maximum benefit that they qualify for. Okay, step 2. What type of federal loans do you have? The 3 major loan types that most folks today have are direct loans, federal family education loans or FFEL loans, and then Perkins loans. For public service workers to get credit for their FFEL or to get loan forgiveness for their FFEL or Perkins loans, they'll need to consolidate those loans into a direct loan. Remember, what's special about the waiver period is that normally when you consolidated your loans, you lost any past credit that you had made towards forgiveness. But during this waiver, you can keep that past credit and apply it to the new consolidated loan. The final step that all public service workers with federal student loans should do is certify your employment with the Department of Education. Remember, qualifying employers are any level of government, 501c3 nonprofit employers, and then certain other nonprofits. The form to do this is called the Pslf form, though it was previously called an Employment Certification Form, or ECF. Excuse me. Borrowers should certify their employment using the Pslf help tool, which is the same tool that you can use to search your employers. And that tool will generate the form for you, which your employer will need to sign. And any employer that you're claiming as a public service employer will need to sign. So we just discussed the 3 steps that borrowers should take to make sure they benefit from the current waiver period. Now I'm going to briefly show you some step-by-step instructions on how to do all of this, and we'll start with confirming your employer is Pslf eligible. So you'll need to log into studentaid.gov. If you don't know your login information, there is a way to reset it and gain access. Hover over Manage Loans in the top toolbar, and then click on Public Service Loan Forgiveness in the drop-down menu. You'll see the Pslf help tool there, which you should click to launch. Excuse me. Borrowers can look up all of their employers since October of 2007 in the help tool by entering their tax employer identification number, or EIN, and then also your dates of employment. You can check your employer's EIN by looking at your W-2, by asking your employer, or also by Googling them if they're quite large. If your employer appears when you run the search, you can see down here that the state of New York came up. Your employer is a confirmed public service employer, so you can proceed to the next steps of checking your loan types and consolidating if necessary. If your employer doesn't appear, you could still be eligible because this list isn't exhaustive. It might mean that no one else from your organization has sought Pslf in the past. So don't be discouraged by this, especially if you work for a government agency or a 501c3 nonprofit and you know that you're eligible. Some eligible employers will show up as ineligible. Okay, so once you've determined whether your employers are eligible, you should confirm what type of loans you have. This can be really confusing and many folks don't necessarily know. So to see all of your federal loans, you should log into your online account with studentaid.gov. You'll have a dashboard there that lists all of your loans, and any that say direct are direct loans, and any that don't say direct will need to be consolidated. For a more granular list, you could also download your loan data, and you can see how to do that on this slide. Now on the dashboard that lists your loans, you'll see the current balance, and then there are little arrows that will break down the loan types for you. So here you can see that this person already consolidated their loans and they already have direct loans. So once you're on this page, you'll be able to tell which type of loans you have. And you can see the other categories listed as well, like Perkins or Graduate Plus loans. And certainly if you download your aid data using the instructions from the previous slide, you'll be able to see which ones are direct and which ones are not direct. And if you have non-direct loans, you'll need to consolidate them. So to consolidate your loans, you'll need to log into studentaid.gov again, hover over Manage Loans, and then click on Consolidate My Loans in the drop-down menu. And you can access the consolidation application here. It'll then guide you through the next steps you need to take, which includes selecting the loans that you want to include in the consolidation, confirming the amount and rate of the new loan, and then selecting your payment plan and servicer and signing for the loan. Here is a tip specific to the waiver. If you have a mix of older loans and newer loans, so some would be closer to the 10 years needed for forgiveness. If you consolidate all of the loans together, the new loan will be awarded as much credit towards forgiveness as your oldest existing loan. So if you consolidate old and new loans together, when the consolidated loan is ultimately forgiven, the entire amount will be forgiven. Excuse me. This is really helpful for folks who have older FFEL loans, but also newer direct loans. You might not think to consolidate your direct loans because they already technically qualify, but if you do consolidate them, they could all be put on the same timeline as your oldest FFEL loans. So that's really helpful. Remember that for the regular PSLF program, you need to be enrolled in an IDR program or an IDR plan, an income-driven repayment plan. So when you're consolidating, it's a good idea to choose one of those plans as your repayment plan. And remember that some of these names include income-based repayment or IBR, income contingent repayment or ICR, pay and repay. And these payment plans within income-driven repayment are all different. So there is a repayment calculator tool that you can use to help choose the plan among these four that is best for you. Finally, let's review how to certify your employment. Excuse me. Just like with confirming that your employers qualify, you'll need to log into studentaid.gov again, hover over Manage Loans, and go to Public Service Loan Forgiveness in the drop-down menu. So we're going to go back to the PSLF help tool here. You'll remember this step from earlier. This is how you looked up your employers. So here you can add your employers using your dates of employment and the EIN that you have. And then the PSLF help tool will guide borrowers through the next steps, which include choosing the loans that you want to include in PSLF loan forgiveness. And once you complete each of the tool steps, it will generate a form for you that you can use to certify your employment. Again, this form is called a PSLF form, but it was previously called an Employment Certification Form or ECF. And this is the form that you must submit to receive the benefits of the PSLF waiver. Once you have the PSLF form, you'll need to have any employer that you are claiming as a public service employer sign the form. And once the form is signed, you must submit it to the designated federal student loan servicer for processing in order to make sure that you get the maximum benefit that you qualify for. Everyone must submit a new form that reflects all of their qualifying public service work by the October 31st, 2022 deadline in order to benefit from the waiver. If you worked for a nonprofit that is now closed, or if your employer is refusing to sign the form, there's also a box to check on the form that one of these is the case. So if these are issues that you're experiencing, there are ways around them. To send the forms, you're able to fax or mail them in. You could also, do both of those things if you're afraid of them getting there. Fed Loan Servicing is currently the exclusive PSLF provider, or the exclusive PSLF servicer for student loans. However, they announced that they will be exiting the student loan market and transferring all of their PSLF portfolio to a company called Mohila. I'll get into more specifics about what this means for borrowers in a moment, but I want to flag here in case borrowers currently have Fed Loan Servicing as their servicer. Sometime very soon, your account will be transferred to Mohila, so I want to flag that for people. Okay, what is the process for getting forgiveness? This is the general process, but it applies to the waiver as well. So as I mentioned, FIA, operating as Fed Loan Servicing, is currently the exclusive servicer for the Public Service Loan Forgiveness Program. However, all PSLF accounts are being transferred to a company called Mohila. So borrowers seeking PSLF need to send their PSLF forms to Mohila at this point. They're going to do a preliminary review of loan eligibility. And if you have a qualifying loan, your loan will then be transferred to Mohila for processing, or for servicing, I'm sorry. And if you have, at which point it will run through the other criteria, such as employment and qualifying payments. Unfortunately, there have been a lot of problems with people finding out too late in the game that they thought they qualified, but something had gone wrong. So for this reason, we recommend that you submit a form as soon as you're interested in PSLF, and then do it every year until you qualify for forgiveness. And then also do it every time that you switch public service employers. You don't have to do this. You could document everything after 10 years, but this way you have a great chance of catching any mistakes that might arise and dealing with them as they come. The Department of Education has stated that they are continuing to review the PSLF process, the PSLF cases on a rolling basis. So there's no exact timeline for when you might receive notification from them that your application has been accepted or that you're receiving forgiveness. And if you already have Fed loan servicing, your account will be transferred to Mohila soon, and the companies will handle this transfer. However, it's best practice to keep your own copies of all your records because sometimes things get lost from one company to another. So if this transfer is going to affect you, we'd recommend keeping and downloading all of your account history and records as well. Okay, now we'll talk about some common issues that borrowers have faced with the Pslf help tool and how to address them. So when you submit your Pslf form or your employment certification form, it's important to make sure that the form is easy to read. If your employer has written over or crossed out anything, like in this picture, you should request a new clean application from your employer. Often, if anything is crossed out or written over, like in this picture, the application will be automatically denied, or the time that it takes to process it will delay your application. So your application could be delayed or rejected outright. So make sure that you have a complete form that is clean and easy to read. Could save you a lot of time in the long run. When borrowers complete the Pslf help tool, the form suggests that a borrower must take their loans out of administrative forbearance under the payment pause, excuse me, stating the following under the subheading, get out of deferment or forbearance. This can be a bit confusing. Because student loans were placed into administrative forbearance under the payment pause, and pause payments continue to count towards Pslf eligibility, borrowers do not need to stop postponing payments in order to make qualifying payments. Although the form goes on to state that this is the case, that a borrower doesn't need to remove their loans from the payment pause, we understand how this can be confusing. If you choose to use the Pslf help tool for your application, many borrowers are unsure of how to proceed when they get to the questions on this slide. If you've made over 120 payments on your loans, the Pslf help tool might not let you choose that option. This is totally okay. Just ignore it and move on. And choose, no, I haven't made 120 qualifying payments. No matter what you select here, your account will still be reviewed in full by the Department of Education. Finally, from what we have seen, notices with inaccurate Pslf payment counts have been one of the biggest sources of confusion with the Pslf help tool. If you're consolidating a Pell loan or a Perkins loan in order to take advantage of the Pslf waiver, you'll receive a letter from Fed Loan Servicing after the consolidation is complete, noting that you have one qualifying Pslf payment. Don't worry when you receive this letter. Here's what is actually happening. This is an auto-generated letter that is hard-coded to review under the standard Pslf program that we reviewed at the very beginning of this presentation. When you consolidate your loans, you'll be asked if you're doing so to take advantage of Pslf. And since you are consolidating for the purposes of Pslf, you'll say yes. And after your consolidation is complete, Fed Loan Servicing will notify the Department of Education, who will review your account to determine how many qualifying payments you've made towards the Pslf waiver. You'll then receive a second letter from Fed Loan or from Mohila at this point, saying how many payments that you have towards the waiver. And as I mentioned before, this process can take a few weeks to a few months to complete. And the Department of Education does these in batches, so there's no concrete timeline from when you might receive notification from them. Okay, so let's go over some important takeaways. Okay, remember that credit will be given for months during which any loan type was in repayment. Remember that some periods of forbearance, namely periods in which you had 12 consecutive months of forbearance or over 36 cumulative months of forbearance, those will count towards Pslf credit. And then also any deferment prior to 2013 because of that IDR account adjustment that I mentioned. Remember that the deadline to apply is October 31st, and you have to consolidate and submit your Pslf forms or your ACFs by that deadline. And then follow the steps in this presentation in this order. So first, confirm that your employers are eligible, both past and present. And then make sure that your loan types are correct. And if you don't have a direct loan, consolidate your loans to make them direct. Then submit a PSLF form for any employer that you are claiming as a qualifying public service employer since that date of October 1st, 2007. And then finally, if you have any issues, file a complaint. Some states have ombudspersons within their state, but then also the Federal Student Aid Office within the Department of Education has an ombudsperson, or you could also file a complaint with the Consumer Financial Protection Bureau. So if you experience any issues, please file a complaint. And okay, I think that was a lot of information on a Tuesday afternoon. So let's get to some of your questions now.
Thanks so much, Amy. That was great. And so we do have a few questions, and I just also want everyone to know that you can continue to type in questions as we go through the Q&A. Before I start questions for Amy, also just a reminder to everyone that the session is being recorded, and also information will be shared out after today's presentation. So I know we tend to get a lot of questions about that. Amy, we've gotten a couple questions. Specifically, do Parent Plus loans, are they able to take advantage of the waiver? And can you talk a little bit about the treatment of Parent Plus loans with this waiver?
Yeah, this is a great question. So in general, Parent Plus loans qualify for public service loan forgiveness under the normal program requirements because Parent Plus loans are direct loans. However, they were excluded from the waiver. And so the only way that you can get Parent Plus loans to be included in the waiver or to get those rules to apply is if you have Parent Plus loans that you took out for your child's education, and then also loans that you took out for your own education. If you consolidated those loans together, they would qualify for the PSLF waiver. This is something that we've continued to do advocacy around to encourage the Department of Education to include Parent Plus loans into the waiver because they were excluded. So that is unfortunately the only way that you can get Parent Plus loans to qualify for the PSLF waiver at this time. But we hope that changes.
Thanks, Amy. And then for people who are going to go through the consolidation process, if they do have, whether they have a Parent Plus loan or a Psl or Perkins loans, can you talk about how long it takes to consolidate?
Yeah, absolutely. So the consolidation process is actually a little bit shorter and a little bit simpler than the PSLF waiver process generally. So it usually takes about 30 to 45 days for a consolidation application to be processed. We've learned from the Department of Education that you don't need to wait for your consolidation application to be approved before submitting your PSLF forms. So if that's a concern, you should still consolidate first and then submit your PSLF forms, but you don't need to wait until the application is processed before submitting those forms. But then again, so that's the timeline for consolidation is that 30 to 45 days. But again, the timeline for PSLF under the waiver is a bit more nebulous because they do them in batches, so we're not sure exactly when you might receive notification from them.
Awesome. Thanks, Amy. So do you mind repeating that one more time? Because I know we get a lot of questions about that. How long during this waiver process should people wait to hear back?
Okay, so yeah, it's unclear. It could take a few weeks to hear back from the Department of Education. When you submit your application, you should receive a notification that they received it, but to hear back about the forgiveness or about how many credits you have towards forgiveness, that could take a bit of time. It sometimes takes weeks, it sometimes takes months. It really just depends on the department, and there's no direct timeline for when you might find out.
Awesome. Thanks, Amy. And then also, do you mind talking a little bit about, we've gotten some questions about a qualified employer. So someone says, I'm not sure what state they're in, but does it matter what state you work in if you work for a state agency or a local government?
This is a great question. No, so it doesn't matter. So this is a federal program that applies to all states, all 50 states. So if you're working for any level of government in any state or city, it doesn't matter. It's any federal, state, local, or tribal government, your work is qualifying.
Awesome. Thanks, Amy. And then can you talk a little bit about loans that may have been in default, forbearance, or deferment?
Sure. So just to review, so if you have any loans that have been in repayment status, even if you didn't make a full payment, even if you missed a payment, as long as your loans were in repayment status, that month counts towards PSLF credit. That's under the PSLF waiver generally. However, because they also announced this IDR account adjustment in April, some periods of forbearance and deferment will count. So again, it's any period of forbearance that is 12 consecutive months or over 36 cumulative months of forbearance. Those will be counted, as well as any periods of deferment prior to 2013. Periods of default do not count towards PSLF loan forgiveness. If you're currently in default, you will need to get out of default before you can apply for this program. And so, that looks like either rehabilitating your loans or consolidating your loans to get out of default before you can apply for PSLF. I hope that was clear. Do you have anything to add, Kat?
That was really helpful. And then as one follow-up, do you mind explaining the distinction between the COVID payment pause? That was really helpful explaining default, deferment, and forbearance. Can you talk a little bit about the COVID payment pause?
Yeah, sure. So as a reminder that, for the months that are experiencing the payment pause, we've been put into administrative forbearance since March of 2020. For any of those months, if you've worked for qualifying employment, those months will count towards PSLF credit. So that's a different type of forbearance than I'm talking about when I talk about the other forbearances of 12 months or 36 months. Like, those are different forbearances. So right now we're in a period of administrative forbearance, and those months count towards PSLF credit, definitely. And so, I know that sounds too good to be true. For that, basically the past 2.5 years, you can receive all of that PSLF credit, even though you haven't been making payments. But that is the case. It is true. So all those months will count towards PSLF credit, as long as you were, working in qualifying employment, and if you get your forms in on time. So those are the caveats there.
Awesome. Thanks, Amy. And then what if someone says, I'm not at 10 years yet. I'm only a couple of years into the process of PSLF. Can they still benefit from this waiver?
Absolutely. So yeah, as I mentioned at the very end, we recommend that you submit a form as soon as you're interested, every year until you qualify, and then every time you switch public service employers. You don't have to do this. You could document everything after 10 years, but if there are issues that come up, and there have been many issues, right? Like, since I mentioned at the beginning that 99% of the people who applied were rejected. So there were issues, right? And so it's better to know them up front before, doing 10 years of public service and hoping that you have everything right. So certainly if you're only 2 months into your career or 2 years into your career, you could submit. The benefit of the waiver right now is that you can get retroactive credit for that time that wouldn't have counted if you, if you hadn't already, raised your hand and said, like, I want to take part in this program. So absolutely, if you're even just starting out at your career, submit a PSLF form or consolidate your loans, whatever you need to do to take advantage of it for your particular situation. But absolutely, we'd recommend doing that.
Awesome. And then, Amy, does contract work for a nonprofit or government agency count for PSLF?
Yeah, this is a great question. Unfortunately, no. It matters who's on your W-2. So if you're a 1099 employee, if you're an independent contractor, that work will not count towards PSLF, even if you're working or contracted by a 501c3 or a government agency. So it really matters who is on your W-2. You have to be directly working for a nonprofit or a government agency in order to take advantage of this program.
Thanks, Amy. And then, do you mind talking a little bit about also if people have already refinanced into a private loan, or people already have private loans, do those qualify for PSLF?
So this is a federal program that only applies to federal student loans. And so if you have a private loan, either because it was originally a private loan when you took it out for your education, or if you've since refinanced your loans with a private company, those loans will not qualify for public service loan forgiveness, unfortunately.
Thanks, Amy. And then if people want to figure out how do they send their forms into MOHELA, where can they get that information about, getting the fax number, getting the mailing address?
It'll be in the PSLF help tool. So when you're choosing your servicer for the Public Service Loan Forgiveness Program, you should choose Mohila, and it'll come up when you're using that tool. It'll also be on the forms when you print them out, or like have them on your computer. It'll say like where you can fax or mail the forms to on those forms.
Thanks, Amy. Do you mind talking again? We've gotten a lot of questions again about people who want a little bit of clarification about consolidating. Do you mind talking about again, someone who either has a FEL and Perkins loan and why they might consolidate? And then if someone has a direct loan, do they need to consolidate? Is there a reason why someone with a direct loan might want to consolidate?
Yeah, these are great questions. Okay, so just as a review, if you don't have direct loans, they need to be consolidated in order to take advantage of this program. Loans can take many forms. And so if they don't say direct next to them on your dashboard when you log into studentaid.gov, that's when you know you need to consolidate them. If you already have direct loans, but let's say you have several direct loans from different time periods, the benefit of consolidating all of them together is that they'll be on the same timeline. So you won't have to wait, it's 10 years of payments on a loan, right? On the loan. And so, you could receive PSLF at different periods of time for those different loans. So to make it less choppy, right? And to make it more consolidated, you could consolidate those loans so that they're all on the same timeline set by the oldest loan. That's the benefit of consolidating, even if you have only direct loans. And again, the same is true if you have like a mixture of loans. So say you have FEL loans, also Perkins loans, and also some direct loans. If you consolidated them all together, whatever your oldest loan is, that's the timeline that is going to exist for this loan. So it could save you a couple of years if you have maybe loans from, say you have FEL loans from undergrad, but you have, direct loans from graduate school. If you consolidated them all together, they'd all be on the same timeline as your oldest existing loans. I don't know if you have anything to add, Kat, or if I can clarify more.
No, that was great. And then Amy, people are saying, do you need to wait if you know your loans are going to be transferred from servicers? Do you have to wait until you consolidate, or can you consolidate before you're transferred to Mohila? So if someone's already with Fed loan.
Okay, so they're already with Fed loan, but maybe they have some FEL loans that they still need to consolidate.
Oh yeah, I'm sorry, Amy. I'll answer that one because I realized the way I asked it. So someone's asking, you don't have to wait for your servicing transfer to consolidate. Like Amy said, if you have a FEL loan or if you have a Perkins loan, like Amy said, Amy just walked through the scenarios when you might want to consolidate. You don't have to wait until your loans are transferred. You want to do the consolidation process as soon as possible. So then you can go through the rest of the process to make your PSLF form. But your servicer being transitioned because Fed loans leaving is different than the actual consolidation process. Those things aren't necessarily tied together. Sorry about that, Amy.
Thanks, Kat. No, that's really helpful.
No problem. Thank you. Amy, so if someone has already applied for PSLF, so they applied before the waiver process, but they haven't heard back, is it worth them, still submitting a PSLF form, or should they just kind of wait? What would you advise them to do? I know we can't get exact advice, but if you can walk through some scenarios.
Yeah, sure. So if a person already submitted a form before the waiver period went into effect, but they hadn't heard back, I think I would suggest reaching out to an ombudsperson and trying to have them look into that situation. But also, it really wouldn't hurt to submit another form, especially under the waiver period, where you can get like this retroactive credit that you might not have been able to get under normal program requirements. So you could just submit another form under the waiver too.
Thanks, Amy. Is cancellation, is there a tax? Are you taxed on your cancellation for PSLF?
This is a great question. No, you are not. It does not. It's not taxed.
Thanks, Amy. And then we have these are two related questions about people in current employment. If someone either goes into the private sector or retires before they reach their 120 payments, is there any way to get partial credit, or is this 120 payments or nothing?
So this is 120 payments is the requirement. So unfortunately, it doesn't work like, if you've worked 5 years and made 60 payments, can you get partial credit for your loans? Unfortunately, it has to be 120 payments to receive the forgiveness. But if you do that, then all of your loans are forgiven.
Thanks, Amy. And now what if someone realizes, hey, I've actually have, more than 120 qualifying payments since in service, but I no longer, work for an organization. So if someone's retired or if they're now in the private sector, but they have already worked 120 qualifying payments, can they get their debt canceled?
Yeah, absolutely. So if you are currently retired, or if you're in the situation that Kat mentioned where you maybe work for a private employer now, but you did make 120 payments, then that is one of the changes to the program under this waiver. And so if you're retired, you can still apply. If you've made over 120 payments, you can get your loans forgiven. For this. In addition, if you currently work for a private employer, but you previously made over 120 payments, you can get forgiveness still.
Thanks, Amy. And then what about people who've already paid off their loans? Is there any credit that they can get through Pslf?
Unfortunately, if you've already paid off your loans, there's no credit that you can get for Pslf. But one other thing I want to mention in this context, I guess, is that if you've made over 120 payments on a direct loan, people are getting refunds for those payments that they've made in excess of 120. And so that's just something I want to flag, as incentive to apply as well, because if you've made over 120, maybe you'll get a refund for those payments that you made on a direct loan that were over that amount.
Thanks, Amy. And then one really quick question. This isn't related to Pslf, but someone said, so, they've heard about, a recent settlement for some people who either went to, for example, Corinthian or ITT, several for-profit colleges. What about those loans? That's a different program than Pslf. It's called Borrower Defense. But if you think you went to one of those for-profit schools that's been mentioned in those settlements, you're going to want to go to the Department of Education's website and look up Borrower Defense.
Thanks, Kat. That's helpful.
And then, Amy, for people who are working in temporary employment, but they still are working 30 hours a week, can they get qualifying payments?
Yeah, absolutely. I think it would just be a matter of getting your employer to fill out a Pslf form or to sign it, stating that you worked 30 hours a week. But yeah, absolutely.
Thanks, Amy. And then who can actually sign an employer certification form or a Pslf form?
Yeah, this is a great question. So really it depends on the employer. And so it could be a supervisor, it could be an HR department. It needs to be someone that can verify that you worked there for that period of time, and that you worked there full time or over 30 hours a week. And so it really depends on the employer, but really the Department of Education just wants someone who can verify your time in employment there. So they don't really dictate that. It's really dependent on the employer.
Thanks, Amy. Do you mind talking a bit about how lump sum payments are treated for the purposes of Pslf?
Actually, would you mind talking about that?
Yeah, gladly. So so for lump sum payments, you can get credit for payments up to 12 months. So if you say you make a lump sum payment and you could only get credit for a year's worth, 12 payments for that lump sum payment. So like you can't pay, for example, try to pay off more than a year's worth of payments in lump sum, but you can get a year's worth of credit if that counts, up to a year's worth of credit, if that's as like the amount works for your monthly payment.
Thank you, that's helpful.
Mm-hmm. And then, Amy, we have a question about if someone worked in public service before they took out their loans, can they get credit for that? So they may have worked in public service since 2007 to maybe like 2010, but they didn't take out loans for school until 2015. Do they get credit for the period when they were working?
No, unfortunately, you have to have the loan be originated first. unless it was, as I mentioned, you had maybe 2 sets of loans, and if you consolidated them together, they'd be set on the timeline of the older FEL loans. But if you worked first and then took out your loans, you can't, like, it's flip-flopped. You have to have that loan first.
Thanks, Amy. And again, because we've gotten a couple of questions about this, just like Amy said, so your PSLF time of qualifying employment is tied to your employment. So the months are not tied to, how long you've had the student loan or when you graduated. It's tied to the time that you are working for a qualified employer. Thank you. So thank you for that, Amy. So we've got a couple questions too. Like, what happens if they can't get access to their former employer? Is there still another way to certify employment?
Yeah, this is a great question. So there is a box on the first page of the form that you can check that says, I'm either, my employer's either refusing to sign the form, or I can't get in contact with anyone, or the organization shut down and I can't get in contact with anyone. You can check that box. However, at the same time, I would submit a W-2, or you can submit a W-2 from that time period, verifying that you did work for that organization during that time period, because likely the Department of Education will request that anyway. And so in order to work around that, you can check that box and also submit a W-2 from that time period.
Thanks, Amy. And then we've got a lot of questions. I know, Amy, in the presentation, you talked a lot about figuring out what kind of loans you have. So whether you have direct loans or if you have, FEL or Perkins loans. So people are saying, I'm seeing things like subsidized direct loan, unsubsidized direct loan. Do you mind talking again about knowing what's a direct loan and what's not?
Yeah, absolutely. So it can be really confusing, right? You log into your dashboard and there's all these different loan names. It's confusing, but it's really actually quite simple. So if the loan that you are looking at on your dashboard says direct next to it, that means it's a direct loan and that it qualifies. If it doesn't say direct next to it, it doesn't matter if it's subsidized or unsubsidized. It doesn't matter if you took it out for graduate school or undergrad. What really it comes down to is whether or not it says direct next to it. So if it doesn't say direct next to it, you know that you need to consolidate that loan into a direct loan. And again, if you consolidated all of your loans together, they'd all be on the same timeline as your oldest loan. So I hope that's helpful.
Thanks, Amy. That's really helpful. Again, do you mind talking about where to find information on this process again, like where to start filling out your PSLF form?
Yeah. So studentaid.gov will be the main clearinghouse for all of this information. That is where the PSLF help tool is. This is where you can log in and find out what type of loans you have. So really, studentaid.gov is going to be the website that you will be best friends with by the end of this experience. And that will be the clearinghouse for any information. So if updates happen to the Pslf waiver or to the program generally, that's where they will exist. That is your most trusted source of information because that's the Department of Education's website. So that is where you should go if you want to start this process.
Thanks, Amy. Again, I'm just going to clarify something that Amy said again. So if you're trying to figure out who to send it to in your who to send a PSLF form to, again, that is going to vary by your employer, but a great place to start. So if you work at a nonprofit organization, you might want to start either maybe with your manager, with your HR department, depending on the size. If you work for if you know someone who works for, if it's more so a government, starting with your HR department, again, it's going to vary by your employer. So even, for example, if you're sharing this information with your friends or your neighbors, or other people like in your family, so you might work for different employers, it's going to vary by employer. So you might want to just ask either whoever manages your HR because it can vary. And then Amy, do you mind talking again about, we've gotten a lot of questions about people asking about their loans being in deferment or forbearance. Again, do you mind talking about that one more time about whether or not that counts?
Yeah, sure. So because they're reviewing the IDR process, some periods of forbearance and deferment will count. Periods of 12 consecutive months of forbearance or over 36 cumulative months of forbearance will count, and any deferments prior to 2013 will count. So they're, simultaneously as this Pslf waiver is happening, they're also reviewing the income-driven repayment process, as I mentioned. They have said that they will do this no sooner than January 1st of 2023. So we don't also have a very strict timeline on this. We don't know quite when it's going to happen, but it will be no sooner than that deadline. So those are the periods of forbearance and deferment that will count. It's just that we're not yet sure at what time they will go into effect.
And then one more time, but payments during the COVID payment pause do count. So
They
just
do
one
count.
more
That is
time.
a different type of forbearance, and they do count.
Thank you, Amy. Thanks so much. And then, do you mind talking? So, if someone has worked in public service prior to 2007, does the service prior to 2007 count for purposes of PSLF?
It's a good question. No, unfortunately, it doesn't. Because Congress created the program in 2007, any employment prior to that year doesn't count. And so any employment actually prior to October 1st, 2007 doesn't count. So it's a good question, but unfortunately not.
Yes. And then just a reminder, we've got another question. When you're going through the process and it asks whether or not you have 120 qualifying payments, yes, if you're not sure, it's okay to select no. The Department of Education is going to individually review them.
Mm-hmm.
Amy, do you mind talking again about consolidation? Why it's important if you either have, Psl loans, Parkins loans, or if you're going to consolidate Parent Plus loans with your own existing loans? Why is consolidation during this waiver really important? So why should people do this before the October 31st deadline?
Consolidation during this period of time is really important because it might be the only way that you can get this retroactive credit under the waiver. So again, only direct loans qualify for public service loan forgiveness. So if you don't have direct loans, you need to consolidate in order to take advantage of this waiver process. And then, again, Parent Plus loans generally qualify for PSLF. However, they were excluded from the waiver, so they can't get retroactive credit unless you have Parent Plus loans that you took out for your children's education and and loans that you took out for your own education. If you consolidated those together, that's the way that you could get the Parent Plus loans to qualify for public service loan forgiveness, but there wouldn't be another way aside from that. And so the benefits of consolidating are that, you can take advantage of this waiver because you might currently be excluded if you have a Psl loan or if you have a Perkins loan. So the benefits of consolidation are that you might get your loans forgiven, right? If you follow the steps in this presentation and, the requirements of the Pslf program generally.
Thank you so much, Amy. And just a reminder to everyone for this process, so whether it's the PSLF form or the consolidation process, you're going to find all of this online at the Federal Student Aid website, which is studentaid.gov. Also, I'm going to drop in the chat a link that we have to a website that's going to walk you through this process that Amy just went through. We're also a recording will be shared as well as resources, but also sharing this website that walks through all of this information and some of the FAQs that we went through. I know we're nearing the end of the time, so I'm going to pass it back to Megan. Also, and this might be helpful too, because one of the last questions someone was asking, when are the next set of presentations so they can share with their colleagues? And I believe that's going to be shared in the follow-up information, but I just wanted to double check with Megan and Lauren to make sure I'm giving the right information. But thanks so much, Amy, for all of those questions.
Yeah, thanks for your help, Kat.
Thank you, Amy and Kat. That was very helpful. For everybody asking, yes, we will be sending out the video to everybody who attended so you can watch this again, and if you have any questions, you can reach out to me or Lauren here at the IBT. And if we don't have an answer for you, we can get one for you. I believe off the top of my head, the next dates are September 28th and October 11th. I will check on that and we will include those dates as well in the email. So if you have any coworkers that want to attend a presentation, please, please, please have them reach out to the locals so they can get them the registration links for those. I think it is 5:30, so that's our time. But thank you everybody for attending. Thank you, Amy and Kat, again. And please, please, please apply for your student loan forgiveness. We would love to get as many of your loans forgiven as possible. And thank you very much.
Thank you so much for having us.